I am not a financial advisor. These videos are all meant for educational purposes only. All Complete Trader Academy videos are my personal opinion and perspective. Trading carries a high level of risk, and all results are your own responsibility. Please always demo first. Hey everybody, welcome back to CT Review. Today is February 23rd, Monday, 2026. Hope you had a good day today. So I'm trying to make this video short, but it's going to be long. It's going to be a great video. There's a lot to talk about. FYI, I went to the doctor today, so only traded on the phone for just a little bit, and that was about it. And then, so I have a tinnitus and TMJ issue, possibly they call it. So it's parallel with my breathing issues or whatever problem with COPD and all that. So that's the reason why I took a step back from trading, and then my health, and then trades and all these other things. I'm just stepping back. So, but anyways, that being said, it was a little bit of good news today. So, wasn't as bad as I thought, but I still have to go see another specialist and see what they're going to end up doing. But constantly ringing in the ears and headaches, and it's so hard to focus as a trader. And just so you know, I want you to hear this if you're a listener, that your health is super important. I mean, that sounds cliche, but trading has actually made my health worse. So because of anxiety, because of tension and stress and anxiety and all these things, right? So they're all playing into my health issues. So it's so crazy. I didn't have these issues like that before I started trading years and years and years ago. But I mean, now it's showing up, and it's so funny how it's anyways. But the point of this is that you really got to have that good routine in the morning. You have to take care of your mind. You have to be grateful. You have to not overindulge. You have to be disciplined and rules and I mean, I know you know this, right? But do you? Right? And then we say that we do, but then we end up doing another. That's how I got into this mess when I didn't follow rules of over smoking. And anyways, point is that that this trading will affect your fucking health. Real talk, man. So it gets better with time, but at the same time it just really doesn't go anywhere. Anyways, not to get into too deep of that, but which I'm sure you would appreciate this conversation, because it's real shit, bro. And some people they can't even trade because of the fact that this will not just ruin their life but their health, or vice versa first. But anyways, let me get into the video. So I wanted to go over I just wanted to mention Friday real quick. I left it marked just so you can have it. So if you want to see it. So again, I've been drawing all the examples of what could happen, this and that, and the structure ideas. And that's why I've been saying we're really pretty neutral when I was heading into Friday. That's what I meant on that video Thursday. I still was bearish, but at the same time, it's I knew they're going to manipulate a little bit, and they came back to that breakout area and they took out the high. I was mentioning, is the low of the week Tuesday and the high of the week Wednesday. So what was Friday going to do? Friday turned out to attack the high of Wednesday, so Tuesday was the low of the week. Turned out to be a bullish week, but let me just show you this it was, pretty much a speaker there, right? So you'll get that mean reversion type of trade pulling back in. We swept liquidity on Friday. We bounced, and I left it like this on purpose. We bounced on that same level I'm using, still using this gap here from you can see here between the 21st and the 24th of November. Tagging that top 25%. So if you look on the 1 minute, you'll see that this is Friday now I'm talking about. We tagged there and we just were a buy, sell, buy day. Turns into, that's what happens when you get a little miniature dump and then all pump. And then that's generally seen by, candles that are, straight bullish breakaway imbalances, closing strong, and then buy, sell, buy. So if, that structure looks like this. So I'll just do it from here. A high and a higher low, high and a higher low. bouncing on that settlement level. We're above that daily gap of their open, straight through, and we also, broke this guy right here. And I'm mentioning this for today's video. You're gonna see how and that trade that I took for this sell, where I'm highlighting right now. So there is the breakout level with that first imbalance of Friday that never got touched. Number two, it also was it's sitting on an old weak gap right there. I'm highlighting it right here. Okay, so now that I've said that, the buy sell buy day turns into literally highs and higher highs and higher lows. Another higher high, then it was a higher low. Real deep, almost a 100% retracement. That shit happens. It's rare. This is rare, but it happened. All right. Internal high, another higher low, another higher high, and another higher low, and then we made a new high, and we're sweeping out that Wednesday's high that I talked about, and we're inside this old weak gap, which is from right there, 2 weeks ago. So not last week's open, but the week before that. So yeah, 2 weeks ago technically. So we're talking about right here, Sunday, February 8th. The 9th week, right there. So we swept them, and we've been tagging that, and that's that breakout level. And then we have the bottom quadrant of that daily imbalance on the 4th, and then we have this one over here, right? It's fine, but that's what they did, and now that means that now that this leg is done, we've reached it pretty high, and I won't go into the average daily range and all that shit because I got to move forward to today's video. But you'll see that then we forget this internal lower low and lower high, but it's just a pullback into 50% of this entire range from the low that it made when it tagged that 25% right there. See that? And then we made that new high. And then that is there's a first imbalance from that Monday of the 2 weeks ago also. That so not only was that the opening gap area, oh shit. What the fuck? Where are you? Yeah, so the opening gap is in the gray over here for that Monday of 2 weeks ago on the 9th, and then the first imbalance happens to be in the green where I'm highlighting it. So now that I've said that, this will make more sense. Okay, so I'm just doing Friday real quick, man. And anyways, that's what this is, right? So we're going to be a part of it, a higher low, right? You're not bearish. You're not looking to take the sells for counter trends. It's obvious that they're hunting the buy side, and as I've been saying, we're bearish, right? So, this is before I get into it. What did we do? Well, when I was bearish from here trying to sell on Thursday, well, Friday they came up in Asia and already swept that guy. So a nice speaker going on here, manipulation, holding the market, and then they ended up rushing for all that liquidity and that buy liquidity. Remember, I was like, I didn't like that as an issue. I remember when it shifted right here. I said that in the video of Thursday. I remember saying it, but ended up sweeping, getting more into that breakout area, came to attack them, and then straight for Friday. All the people who are selling and holding the bag, if they're sellers. And trying to confuse the market for this week, to be honest with you. So now that I've said all that, and then, so that's the higher low, and then the leg retracement back, and then from there, they just came up and, pretty much settled out, fizzled out. But you can see you have an imbalance right there. We tagged in first one on the 1 minute. So entries are very difficult here, even if you were to go on a smaller time frame. Otherwise, you'd have to use the entry method of straight close your candles. You have to put your entry right at the close of each candle, and then or wait for more higher lows or down candles to support price. And in this case, if you can see them, I've already got them marked out right in blue right there. These consecutive 3, we come up, we dig on it, we dig on it, we dig on it. You see that? And then once we get up here, we come back to this one, we dig in it. Once we dig in it, then we have another entry method of using an inversion here plus the imbalance in blue. X marks the spot. Notice how we come above, we come back in, we tag it. And then these are also the next 2 consecutive down candles. Obviously X marks the spot on that entry right there, but then when we pop up here, you got a nice imbalance right there. tags in, takes off, sweeps the highs, retraces back where? Back into these last 2 down candles. I could have even used this down candle, and then you could say at 50% is kind of like where the price is kind of holding. But anyways, whatever, that's a little bit like semantics. But and then double topped, didn't make a new high, so then they came for a retracement, and then ultimately I'll say that we stayed inside this down candle in the 1 minute. I'm just speaking from a 1 minute perspective. And then what's it called? We had a last down candle here, came above it, digged right into it, and then there's an imbalance here. I didn't draw that. I should have. I'm trying to make this fucking video done, and I am already tired and everything, but I want to do a good video here. Come on. So anyways, we tag in right there, and then you'll see that X marks the spot there with the down candle, the imbalance, holding it, ticking, bodies above, not in the lower half. Pops up again. You can see this last down candle here. We pop into it. Look at the wicks here. Wick, digging into the area that I just talked about of this down candle. And then with these 2 wicks, that wick takes out that previous wick and then closes up strong. Look how we come back and retrace back into the open specifically. Look how perfect that is. That is order flow. That is just like if it was one of these down candle order blocks or demand blocks in this case, whatever. And sure enough, you can see us hitting it damn near almost perfect. You go to a lower time frame, you'll see that I am, oh, I put it on the wrong candle. It's supposed to be here. It's supposed to be right there. Beautiful. Look at that. So the open of this large bullish candle, when it's a big wick like that, you're going to see that it's going to cross over, but it's going to reference that last down wick. Even though it is a bullish candle on a other smaller time frame, this is a down candle in some sense, or maybe consecutive on the second chart. So and that's an entry method as well. Super maybe TMI right here, but that's just super fire as well. No one's going to show you that. Anyway, let me get back into the real video. So straight push through. Now take a look here. Let's go back into today's video. And then before I get into that real quick, you'll see that we have a gap remaining here, right? I'm going to draw that, but I didn't mark the chart today because I wasn't trading at home. I did trade at the doctor for a moment, and you'll see how I did that. But hold on a second. So that being said here, we have the gap here, and that's generally speaking something to look at when you're bearish more. We also dipped down really deep, and we did take out a lot of that liquidity that I was just showing you, and some of this imbalance right here. And then the price is moving up here. Now here's the thing. Now that I mentioned that, I'm going to zoom in here just a little bit of up here. You can see, what do I have up here? Well, I have that bearish imbalance. The new week opening gap, first of all, right? And I have a portion of it's empty. Number one. Number two, we have the opening range gap here, and we have the 50%. And notice how that's a hair underneath the opening week gap. Okay. That being said, we have 2 standard deviation on the Asia range. And then this was really the whole gimmick of today. Are we going to seal that or not for NASDAQ? Well, guess what? Well, we had an algorithmic divergence, which is where S&P and Dow have took out their gap. All right. As you can see, they took out their gap, but NASDAQ didn't. So that was the divergence. Now, just some side information. I was at the doctor and I didn't get a proper analysis, and I didn't have screens, and I couldn't really see anything. My wife was driving, and it's just, it was difficult the way today happened for me. So, I missed all this. My doctor appointment was at 9:20, and I was like, dude, why did I ever make this fucking appointment at 9:20? But, it was all they had apparently. But so I'm talking to doctors at this time, right? So I don't see any of this, right? So what does it do? It pushes up here. It gets to the 50, comes back down, comes back up. It's consolidating, but now you're getting wicks on this top side, first of all. Number one. Number two, those other two assets, they didn't come and seal. Nasdaq didn't seal that gap because they're still remaining. I'm going to draw because I need to. Jesus. I need to do it if you're watching or not. I'm going to put it right there, right? And this is what's remaining. Okay, just like when I showed you in those previous videos, those pink spots left of price action. So I'm going to draw it long. And I use this for eternity. I don't just use it for a week, 2 weeks. I'm not saying that I'm constantly trying to trade to it, but it's a radar if we're headed that direction clearly. Oh my God, there's so much to mention. This is a beautiful video, but you'll see. So that's remaining here, but we're getting these wicks, right? And then we have the highest wick and candle body wise. Okay, so we're digging in it, and I've quadded this. Okay, so you can see it. I've got it quadded right there, and the 50% of the opening range gap is right there. So notice this wick, I got it quadded. So it pushes up to the top quadrant, doesn't take out the high. It's a lower high. We come down. Now the 934 pops up to the upper quadrant, but the lower upper quadrant, just from the 50 to this top 75. Notice how we're in there. And we're tagging underneath that opening day gap. It's the same opening because it's Monday, but the new week opening gap. Okay, cool. Then it comes down, pops back up. Boom, hits the 50% of that wick. Look at that. I'm gonna zoom in, bro. Let me zoom in. Hits the 50% of that wick, which is what you want to see if you're bearish. I mean, technically you don't want to see it go that high. And then it hits the 50% of the opening range gap to the tick. All right, now that we've said that, all right, that's free game for you right there. You'll see it being applied here too. But you want to quad your wicks, you want to quad your quadrants even, and then the price displaces. This is what's key in this whole day today, is that it displaces. Okay. So keep in mind all this shit to the left of the chart. I'm trying to fit everything here. All right. So we still have this area here, and then the levels that you see on my chart. This is the old week gap, and this is how I take it to the sell to here. And then that breakout area that I mentioned earlier. Okay, now let's get into the video. So then we're okay. So we're up, we're down, we're up. Okay, and yes, the way you can sell this from here is you knew that it was a pump dump profile, meaning that you knew it was going to be a bearish day. So for me, this profile, if it was going to be a bearish day, it would be a pump, fake pump, like it's pushing up and then it dumps, right? And it stays a bearish day when we close. Okay. So, and then it turns into a sell by sell, basically the opposite of Friday. Okay. So, and I'm giving you my playbook here. I'm giving you what I use daily, these playbooks here. So you'll see that we displace. The displacement's important because now that's giving you the direction. So then the price sweeps. Let me backtrack a little bit. See these equal lows here. You can see it's really obvious, right? Not only did we have that, and we had this Asia right here, London, bouncing on top of the Asia highs here, but then we had the Asia lows. See that? See how real? It's a nice sell model, basically what I'm saying here. So this is your consolidation, your break out of it, your early and easy, low risk buy in a sell model, and then you have an accumulation. And then you have a second accumulation. Generally, this will be the first accumulation. If that's your original consolidation, this is your accumulation. Raids. And then look on the 15-minute, it's a wick. See how it's a wick right here? And then it closes down. That's not what you want to see when you're bullish, first of all. And then you're targeting, obviously, the lows, right? And then I can draw more. I didn't, there's some stuff that I didn't draw, obviously, which I'm gonna do that for you here. But you'll always have, once you raid and you have you start that sell model with its origin, you'll want to see it, start selling off, but you'll want to see inversions. It always start with a bullish inversion. And like, for example, I'm just going to draw this right here. So it's kind of makes sense on the bullish and balance side. Of course, you're using this bearish imbalance. It's the first one here as well. You're not using that one. You're going to use this one because this is a displacement. It's a healthier size one. This is insignificant. It's inside price action. It's overlapping previous candles as well. So not really something to look at. But let me make sure I drew this right here. This is the close 952.5 and the open is 953. So there is a gap, yes. And then here, the closure here is 961.5 and the open is 961.25. So it's really right there. Okay, cool. So this is not what's really mandatory right now in analysis, but anyways, you get your displacement here, right? So could you have sold from the top? Yes. If you knew that it was a divergence about we're not going in there. They're dangling the carrot for NASDAQ. Number one. Number two, you knew they were already tagging, underneath the opening week gap, plus the 50, plus this information I just gave you here with the wick. All right. Number two. And those are the real, to be honest, that's the real understanding. Plus, obviously the liquidity here that we built right here, pre-New York, and then the one in Asia. Okay, now that we've said that, that's how you could have sold up here. And then you're seeing the wicks, right? You're seeing no bodies up here. If I was to split this opening range gap, put that for your notes, you can also quad this into eighths. So instead of having 25% here, you'll have an eighth in the middle, right? So if you were to look here from the 50% to the 25%, the middle of that would be right here. Right, and you can see the body sitting there, right? So write that down. Anyways, get the displacement. Cool, you got direction. You get a lower low. It's pretty much a break of structure, even low, lower, high, coming up here right into that first imbalance beautifully. You can see we hit 50%. We also take this low out. See this low right here on 937? You could drag it out. It's perfect, dude. And it's just a simple breakout area. So you have the liquidity of the sellers on the bottom half of that range that we made. Even if you use a larger, whatever, 50%, you can see is right above that. I'm deleting that now. And then you want to be entered in a higher premium for selling, right? Better price, right? So breakout level tags that. Tags the 50%, tags the 50% of the, into this inversion. This is even a breaker or resistance block, how we tag that. We broke right through. And then you could see this inversion holding, no bodies inside, very key. This wasn't really that important, but this is how you know that sell model is going to start. So now we're going to hunt these lows here. But anyways, X marks the spot. You can see this wick right here. Oh God, I did it again. This 951. Now we have a macro kicking in. So you have time involved. So you have price and the time, as you know, which is the perfect combination for a trade. But in this macro here at the 950, you can see it shoots right off right to it. And then this is a bearish tool. And you can see that wick up here, it's a pin bar. And you'll see if I graded that, just like I graded that wick, you'll see what you'll want to see. What you're going to want to see is them in this lesson for this video is you want to see them gradually get away from the upper quadrants if you're selling, right? So it was first in the top 75%, then the 75 to 50%. Then it became just the 50%. Then you notice that there's no more, look at how there's no more candles or bodies or wicks or anything involved after this 938. Look at 939 just shoots down. You can be confident in pushing sell once you see that there is no more price action in that quadrant that you're measuring. That's it. That's how you know you're expecting to see the big candles coming in to start pushing in that direction, right? Go back test this. This is a fire video. I should even put it in the mentorship, right? But you can see that happening here. Well, we measured this. We are in the bottom 25% already here. So what does that tell you? It tells you that it's exceedingly weak, right? And then here you can see that the body stops there, right? And then nothing inside. So when this candle shoots down, now I'm back up here. This price shoots down. You can be confident in any time that you push sell because you know it's just going to continue. It's not going to come in. Now here they were fucking dirty. I'm going to show you how they were dirty here with this wick here. All right, I'm going to just show you so you can see, and that's why it's good to use some confluence to the left. Hold on, my phone is calling me. And the doctor's calling me. Oh, I'm gonna push pause. Give me 1 second. Okay. All right, man. So, anyway, so, what was I saying? I believe I was here. So, this dirty wick right here. So notice. So we come up in here with the wick. We have the 25, we have the 50% of the first imbalance today, and we have that inversion right there. Plus this wick here, plus that breakout level right there, right? Or this down candle, I meant to say, right? And that breakout level right there. Okay, so we tagged that perfectly. 50%'s there beautifully. And then no bodies in this inversion. And then look at this candle, this 952. Remember, we're in the macro time, so we're starting to move. And then it pushes up into the bottom half here, comes down. You get this wick right here. See this fucking wick right here? This 957 pops underneath the bearish imbalance here, and it's the first one. So technically, you're looking for your sells. It's pretty easy, to be honest with you, man. I can't believe how easy that was. But at this point, this is when I just finished an audio test for hearing and some other shit, and then I'm sitting down and waiting to talk to the actual doctor. So I'm sitting here and I'm taking this trade here. And again, I don't have good analysis. I'm on my phone, all this bullshit. So, I initially, oh my God, why does it do that? So when I saw this shift, this is when I was watching, and it shifted here and it popped in here. Now I was like, this is a nice buy back up here. At the time, I was, again, no good analysis, not really looking at shit. Just a little impatient. I took a buy up here. I wanted to see us get up here and to see if it was going to keep going. And then it wicked here, and I was like, oh shit, this is going to be a sell. So I left it alone. This wick came up, and then I'm already stopped out. So then for me to take this next sell, now I'm flipping literally bias, but I mean, yeah, I was already kind of bearish as we've been talking about. And then getting into this scenario, we pop up with this wick right here, and then it wicks right back down. So then it shoots back up, and then look where it goes into. So I saw this as a sign of strength to sell, and I take it, and then I end up getting stopped out. This pops up, and then it hits the bottom 25%. I'm like, gotcha, bitch, right? So it's, notice how we're tagging that inversion. Okay, this is the 925. Again, not easy on the phone. And I hate being able to mark anything on the phone, to be honest with you, my fucking fingers and this and that. Anyways, as you see here, that's an internal, just a sucker, trying to induce the sucker. Initially, of course, I need to have my stop loss higher, but I'm not doing that. So wicked out, and then boom, I get in again, right? So as soon as I get in again, we notice how these next candles, is what I'm really trying to say, do not even reach back up into that wick, or even the upper half of this wick. Even if I was to clone this real quick, you'll see that I do this, and just give me a second. I'm just going to do it like that. Notice how that, okay, so notice how now these next candles are not going inside the upper half. This is exactly what I want to see, okay? So, beautiful. I'm going to delete that now. So what does that mean? That means that if they're not able to, well, let me go back to it. Let me put it back. So what does that mean? So notice how when we tagged in here, now I'm expecting the big candles. I'm expecting it to rush and become big candles and push down. So anyways, my stop loss is above here. And then we wick in on this next candle here, this 10:01. Then we have the 4 o'clock kicking in. And then bottom half, big candles come down, rush. Now they come right back up to squeeze into what? Let me blow this up or extend it, I mean. Bam. So 923 and 3/4, and the open here. The open here is the close here is 923 and 3/4. Didn't I just say that? Yeah. So what's it called? So then what happens is we come back in. This is a lower high. So lower low, lower high, lower low, lower high. They come back into a top 75%. And then with this wick here, you can see the lower quadrant. We're sitting inside it. All right. TMI made this way too fucking long. I didn't want to make a fucking long video. But come on, 31 minutes. So long story short, boom, holding the trade to where? I'm in the trade still, holding the trade to where? I have the equal lows here for Asia, and then I have what I told you about the breakout level from Friday, and I have this gap. So putting my so selling it from here and then holding it to right here. Literally have my TP here. This is when I started talking back to the doctor. Fucking price. Check this out. So check this out. So I'm entered here from these candles here. All right. So we wicked in and I'm in. All right. And then I have my stop loss sitting right here. All right. And then sure enough, and my target, I never put a TP. I don't put TPs. So I manually do everything. So what happens is I put the TP right here. Why did I put it here? Because of the fact that it's that breakout area plus the gap plus the liquidity. So liquidity and balance breakout area. Talk about this every day on my channel. Trifecta. Don't I fucking say that every day, don't I? So that's why my TP was sitting right here. And sure enough, this is now where I'm talking back to, now I'm actually talking to the doctor. I come back after talking to him and I hit fucking TP and I missed they missed my stop loss fucking by a hair, dude. I was like, wow, how you like that, bitch? Midnight level here, by the way, right there, midnight level. We come to the midnight level and then sell off from it. Rush right to the gap. Now, if I wasn't at the doctor and I was managing it, two things would have happened. Either I would have took the profit underneath these equal lows, but I would have trailed it. So it would have had this big candle push down, right? This 1052 shoots down. And by the way, we also have the macro kicking in for the 1050. And then this guy right here, see this little 1056? Right now I would be trailing my stop per candle. As you know, I teach on this channel. Right, so every 1 minute candle, right? So I would have let this bounce up a little bit. I don't want to see it go more than 50%. If I had not got stopped out there, because I've already reached my target. I don't care what the shit does. Then this next candle pushes down, pushes down, pushes down. And then look at this guy right here. This guy right there. So if I had fucking was cheap and I put it on, you can see this. If I was cheap and I had put it on top of that candle, you'll see that I get whipped out right there. And I would have probably got stopped out and then the bitch would have ran. I would have been like, oh, you bastard, right? So what I have been doing is I do 50% of the candle. This is the methods that I have chosen. You can either do the whole candle. You could use 50% if it's a big candle. You could use 2 1 minute previous candles. So in this case, always keep it 2 candles prior. So if the candle moved down, and then this moved down, then I would say, okay, well, I've got these 2 candles. Well, they're large, so I wouldn't want to have it that high, but then I'd move it to here. Now, if they're really tight right here and you see that they're about, and then they wick me, then in this case, I would rather leave it here and let it breathe a little bit because I have the gap here, for example. And look, we tagged the bottom of that gap. I would have been fucked right there. But then if I continued, boom, then I would have put it there. He came right here, and then we fell down more. Then I would have put it here, right? And then look at candle, 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 stopped out. So I would have, if that's my trailing method, and then I would have got stopped out on that candle. See how we dig right in, but I don't care. Yeah, it could have dropped even more, but I would have squeezed how many more points? Fucking over 100 points just by trailing it. And then some say, well, why don't you just partial here? I'm a full boat type of guy. Okay, so I like to take the trade all the way to the fullest, and then I can re-enter on a full boat, which is risky for some. But if I immediately get stopped out, I know it's wrong. I'm a sniper. I know how to make it tight. But if you keep trying to constantly try to get in and you're losing, you can go on tilt, and then you could just lose your profits. So just that's insider shit, obviously for me. But I know that. But just giving you some trailing game here, and I don't care. Look what it ended up bouncing around and playing. Doing, coming up to squeeze here, come up to squeeze more of where that breakout area, guys, right here. So we have liquidity built, we have imbalance, and we have breakout area. Trifecta, that's why the fucking price came to here. All right, there's no way else to put that. If I had nothing on the chart, that's look. Isn't that an eyesore, right? It's an eyesore. You can be, well, why didn't this come there for there? Because that's what they love to do. They love to come and squeeze. This was a control of price for a moment. This up candle, see this little up candle. So it controlled it. Then it came. It didn't make a new low. So they build liquidity. They push up to get the easy sellers of that range, right? Because I was trailing. I was telling you about I was trailing easily, and then before I veer off. You say, why don't you just partial this and that? I could take the full boat. I can get re-enter, or I can trade. I can manage the stop loss like this and get more out of the trade. All right. But anyways, coming back up to here to easy sellers, coming back down because this is easy buying. You get this stupid bullish candle that stays empty. So it's a breakaway momentum candle. You can see that people are pushing buying here to come and squeeze out here. You expect some type of buy. And let me bring back into the fire here because I did that on purpose, and I didn't even, again, I wasn't at home. So I'm going to move this over. So now you can see I'm still using it. I'm still using it. So there's no discussion there. All right, take a look, buddy. So, and this is also the top 25%, buys back up to that gap there, then sells back off, making lower highs for liquidity to get ran later, comes back to this low, squeezes out, doesn't make a new low, oversold, sits on the bottom 25% again, buddy. Okay, then what does it do? Comes right back to their original breakout area here. Why didn't they do it? Obviously to the left, by the way. Take a look to your left of the Asia. Look to your right. So notice how when they push up here, if you're buying this, generally speaking, you're trying to hold it. You're trying to hold as much as you can up into this breakout area or above. And sometimes it will do that. But the other side is it won't do that, and it'll fall short. And in this case, build liquidity, and then we ram it one more time to get to where they're going. So they can be a little more confusing. But in reality, this is just a retrace for a lower low, for a lower high, from a lower low, lower high, just retracing back, right? And then now that they've done that, they came back to make the lower low. In this case, they still didn't take out that motherfucker. But where is it bouncing? Oh, the 25% again from November? Yeah. So, I mean, you can't make that up. And then it's a higher time frame. It's a weekly chart, a weekly level chart level. And then anyways, we just settled there, and then that's where we're at. Fucking move forward, bro. So when we gap down here, that's when we pushed, when we pumped up, and then we were oversold here with the fix. We started pushing up the rest of the day, baby, and we were selling the rest of the day, baby. And then when we topped out here, you can see the gaps leading, big bullish candles. Boom. Oh, we're on an overbought here. Oh shit, I think it's about to fucking top out. Oh shit, that's when we spot. When this topped out here, we were here. Sick shit, right? All right, I ain't gonna go through the rest. Dollar, well, I don't know. Pretty much neutral. Has a lot of room for the top side, a lot of room for the bottom side. I kind of feel like dollars in this scenario here, where it sank down, came back up, retraced, and then it's either going to push up or push down. In this case, it pushed up. Whereas another example, very similar to this, this drop down here. So drop down, pushes up, lower high, and makes a new lower low. So this is a push down, lower high. Does it make a new lower low, or in this case, it made another high? So I feel like it's going to be on the bullish side more. We are leaning to being bearish because our price came back lower. That could be the significance of us being a bearish economy with the stocks. Anyways, told you about that lower high there. And then here you had a nice lower low with Dow, and then that kind of pushed it up one more time, which is nice too. Told you about Dow being very suspect here. Said it was going to start like inching its way down. Talked about it fucking topping here, if you recall. Fucking OG shit right there. I called the top right there, baby, because I knew it was reversal price action, and it was very, very unique. If you go take a look back at this price action, the way it was designed, just push up in a quick high resistance pullback. I've seen this many times, and sure enough, we just bear flagged here and rolled right over. Fuck, beautiful, man. I said look, all this liquidity built right here. I said, we got into this bearish daily imbalance and we sold off, bro. I mean, you can't make that up. I've been talking about it. Here's your pump dump, bro. So there it is, beautifully pump and the dump, and then you expect to, and I've seen this a million times with Dow, bro. So you get this literally no ranges here, just sinking, and then it starts to fan out, right? Starts to that's my saying, fan out. I learned this from Europe, from Euro USD actually. Very, very bearish price action there. And then S&P, I told you about that too, kind of rolling over. We're using that as a bearish imbalance. And then I talked about the structure before it got happen, and we're not even still there yet. So I said, is this going to be the situation of that's the break, lower low, lower high? We made a lower low, we made a lower high, and then are we going to do this, right? That's basically what I've been saying. Sure enough, so far we're kind of there, but this video can be way longer because of the seasonality that we need to talk about. Fuck, 42 minutes. So, that's the thing. So again, pump, dump, pump, 3 drives, dump. I mean, that was clean. Pump, 3 drives, seal, dump. Right there. Gorgeous. So, and then Nvidia just fucking, again, with the suspect ass moves, man. Pushed right up just to get these guys real quick and pull right back in. This is really sloppy. But if you notice, anytime we have sat like this for so long, we always get a pullback. Like sitting too long, don't know where it's going, pullback. Up here, sitting up here, pullback. Over here, sitting going sideways, where are we going, pullback, right? So I just, general speaking, I would expect them to, that's fucking hard to catch, bro. So it's like, okay, they know people are trying to sell, they're trying to inch their way up before they pull back. This is just kind of where I'm at right now, but I'm gonna forget something. I had a projection here. I had a projection here on the Tuesday that I used. Remember that shift of structure? I even said it in that video that when we pushed up like this is probably a shift of structure. And sure enough, we did push up a little bit more, continuing, but I got that measured here to swing here, of this last swing here, and then the 2 to 2.5 is pretty much where we were sitting this whole time. You can see I put on the 4 hour, and we're pretty much like stuck there, right? So, and that's what's keeping the price down. And then structure wise, as you see, we're going sideways here, bro. But I mean, in a bullish world, we shouldn't be here. We should. And if we are going to buy, it needs to shoot this straight the hell up. So here's the problem here. It's sideways. And that's why it was very difficult to this is a very, very tough market. Obviously, we're back in the same ranges, blah, blah, blah. I think that we are headed, if we're bearish, obviously, we've been inside this suspension block on the weekly. Okay. So notice how we've been tagging that. Even last week, we've been tagging that. Let me put this on a higher time frame. Shit. Come on, man. I gotta be done, bro. That's why I'm starting to get a headache, and I have the ringing popping in when I talk too much. Like, why is it not on any other time frame, dude? What is the deal? What am I doing? Did I even click? I just clicked the wrong thing, huh? Damn. Didn't even realize that. So notice. All right. So this is a whole new fucking conversation, but we've been in this, right? So obviously, if we're above it, it's bullish, and if we're below it, it's bearish. So we're gonna want to see us get underneath that 50, and then as you can see here at that 50 there, if you quadded it, the 25% would be right here. You can see I'm just eyeballing it. The bodies are sitting there roughly. So we're sitting here and look at to the tick, how we tagged it there. I think I've already drawn this before, right? But again, we're using that as support, and then I've talked about the lower side. I can't really go into it too much, but with the price being here this low, I think it's the bearish part is really coming, and but now here's where I was going to say the but and the seasonality and all that. For the being February 23rd, okay, we're supposed to make a huge from the 10th to the 20th. So the 10th to the 20th, we were supposed to make a huge push up and a huge push back on the 20th. And I don't really see that in this price action. What it shows after the 20th to the 30th, which is the end of the month, it shows that we do go more sideways and we are bearish. So I don't think this fuckery is done, to be honest with you. So I'm going to draw this, all right? Looking at the 5, 15 year and the 30 year, we have came down like kind of where we are. And then what we do is we retrace back up with higher highs and higher lows, getting up back to higher. All right. This is what they say. All right. And then the 5 year especially comes all the way fucking down. This is it right here. Okay. I know. This looks crazy. I know. But you got this price action here. So if it doesn't do this, this is the 30 year. Okay, the drop like this extensively is the 5 year. The 30 year shows that we do all this and we don't push up as high. I know. So the 15 year and the 30 year don't push up as high, but then we keep playing around sideways, literally. Now it's March, okay, and we have dipped back down, and then we buy the fuck back up, and then we're bullish. All right, so that's the normal world of being bullish, right? Where we had that nice little pullback, and then we push up straight. What's today's date? So I remember this, February 23rd. So we end up pushing back, and then we mosey on our way for a bullish year. We don't know. That's the question. Are we going to get a repetitive year like the 25, where we came all the way back down? The AMD of the year is we accumulating and manipulating down, and then we distribute in the spring and summer, and that's really like where we're at here. But it being down here and taking out that low. I was talking about on the daily that I wanted to see this be a swing. And then when they turn on, I made a new high. So the structure, now I'm doing too much here. If this was the lower high, lower low here, and then they made all this funky ass drives to still be the lower high. Remember I called that being maybe the lower high or that being the lower high when we came up again, right? So, and then with our big response back down for Asia, and then we're selling off today the way we did, it's like, okay, now are you ready to continue that flow? But we just had those extra drives up. What are you going to do? There's nothing I can fucking do. I can't foresee that. And that's why it's been a tough market. But we had some room on the overbought for the 4 hour, for example. So we'll see. But having this bearish day today, you're going to definitely need to see a lot of strength on Tuesday. Every day should close as a bullish day if it's bullish. So it's got to like creep it on its way back up. And are we using this as support for now? And that's where, when I was just doing the drawings, yeah, we push up, we retrace, and then we continue back in March, right? But if it's the bearish side, then it might push up. If it doesn't sink from here, then it's going to push up here and then fucking roll over. So that's kind of like really, I know I've said a lot, man, but right now we're in this 2 to 2.5 here. And then on the bearish side, we're in this -2 to 2.5, and then this range here. So we pulled back in. You know, in the retrace side, we came up to the 2 to 2.5 here. Now, where do we measure? Look at these consecutive candles right here. It's going to be hard to do this measurement, but I'll tell you, I'm going to do it now too. Well, I like this too. I'm going to measure here. And there's a couple way to measure this. Oh, I made a lot. Fuck me. Okay, so there's that measurement there, and I know I'm doing way too much here. I gotta go, but I want to measure this here to here. And then let me move them over a little bit because I know it's fucking right on top of each other. Let me just do that, right? That looks a little cleaner, right? So does this 2 to 2.5 hold is the question, or are we going to pull up to the 3.5 to 4 or maybe sweep these guys, right? That's really dirty. They've already got it. We'll see what I don't know. That's the problem. I don't know. But here, if we're going to just continue with the bearish flow here and not even look at the seasonality, because since the seasonality wasn't really working in this whole time frame in February, then if we're bearish and we roll over, dude, I wouldn't be surprised if we gap down. But then I'm going to look at these measurements here. So this is an external high and this is an external low. That range, we broke that. So however we roll up even and then fucking roll over, this is your next target. The -1 to 1.5 is here, and the 2 to 2.5 is here. It's underneath that low. That's the previous week's low. And then this -1 is going to be underneath these lows. And then now we're talking about sweeping bearish and getting into what I talked about here with the bearish imbalance, not bearish, kind of like this liquidity here in the breakout area. This 23,000 level is screaming hello. So, and then this area here, I didn't draw any of this, and I made a video long. I hate that I make it long. I really do. I'm gonna make that a bullish weekly. See, breakout. So you got liquidity, you got imbalance, and you got a breakout area. That's your trifecta, right? So I'm skipping through all this shit and coming right to fucking 23,000 area. And yes, we are in the 24. So we're talking about 2,000. We're talking about damn near 2,000 points, right? Got a gap right there. We'll see, man. But that liquidity run, I'm gonna draw it. I'm gonna draw it, buddy. Right there. And bam. Haven't drawn this in a long time. Let me make it thicker. All right. You see that shit? Is that pretty obvious, right? Can you see it? All right. All that. Higher lows. Look at that. No body here. I love this area. So that's the downside there. And I've talked about all this, didn't I? You guys take care. God bless.